Hello everyone, this is Jem from Data Finance. Welcome back to our channel. We are with you on 2nd of February in afternoon analysis. On this video, we will cover some news first and then we will just go ahead with our charts. First of all, we have received ADP private sector employment data and it was really bad data. Reason, expected number was 200,000 people to be hired by companies, private sector, but it didn't happen. Then 300,000 people have lost their jobs in 1 month, or they have quit from their jobs. But still, the actual report is missing 300,000 jobs in private sector. That's the thing, and this is the second biggest decline, and then three negative territory from the beginning of the pandemic. First one at the first month of pandemic, the second one at the end of December, only 75,000, and this one is 300,000 in negative territory. That's why it's really bad data. So this is just keeping dollar index a low level because people are just getting anxious about how about non-farm payroll data. This is private sector and it's happening like this. So what happened in non-farm payroll government sites? So they will just wait for that one on Friday data. We will just see how the data will be reported. All right. And OPEC Plus meeting has ended up, and they have just decided to stick to plan, and only 400,000 barrel a day production will be increased in March 2022. That was for March, and they will get together. They will just meet again on the 2nd of March. They will discuss future production cuts or production rises. So 400,000 barrel per day in March was expected. That's why we haven't seen really big effect in the market. Just before the announcement, some people just wanted to push the prices high. It just tested 89 level, but it didn't stay there for long, and then suddenly it just declined again to 87, 88 levels. All right, we will just go ahead with our first chart. As you can see on our first chart, we are just checking dollar index. Dollar index has tested 97.400 levels. Then after that one, we have seen a really big decline, and right now RSI is just showing us that this decline may be over. We are entering to over sold territory, and also the line, as you can see here, the first decline, and from this level it has started to its rise. We are at the same level of that rebound. So the next hour will just tell us if dollar index just rebound from this level. We will see 97 levels again. It will just consolidate in this new range because it was trading all like this on this range, and we may see this range is just new territory for trading dollar index. As we get closer to March, this will be our baseline for future rises, because in future 98, 99 level of dollar index is being expected with hearing first rate hike, second, third and fourth rate hike will just keep dollar index higher and higher. All right, let's go ahead with our second chart.
You are ready to win with us. GAN Markets.
Our second chart is gold. As you can see, gold is just testing on the last hour it has just tested high level after ADP data, because it just expected, like investors just expected it will just make a big impact, but it didn't happen like that. The risk scenario didn't work out because it's not non-farm payroll, it's the private sector. We know that there is a great resignation in US. That's why the previous month was 800k and the expectation is 200k. People were expecting a drop already in the market because of this great resignation problem in US, but they didn't expect this one. So just a reaction, it just tested high levels, but it couldn't stay there for a long time. Right now, as you can see here, 1800 level is just working perfectly as a support level, but this level is critical, because if you just hear a good announcement by US side, if you just hear dollar index rise again, dollar index right now it's really low and it's trading like this. When we see dollar index rise again, rebound again, so it will try lower levels, it will just pressurize by dollar index. Normally, like on that decline of dollar index, it should have tried higher levels, like something 18 to 12, 18, 20, something like that, but it didn't happen because people are just investing in US 10-year bonds still, because interest rate, the yields is 10-year bond yield is really good level, and nobody's expecting gold rise in short term if we don't see a war between Russia and Ukraine. That's all about it. All right, let's look at our last chart. Last chart is GBP USD. So I'm just trying to show what can happen in GBP USD. GBP USD right now it's in kind of mixed situation, because tomorrow we will just hear Bank of England interest rate decision, and many people are expecting first rate hike of this year by 0.25% from the 0.25 to 0.50 level. If that happens, so GBP will just get a valuation and then it will go high. But at the same time, right now, dollar index is low, really low level of recent days. So first a rebound, if dollar index just rebounds itself, first decline, and with the news of Bank of England decision, we may see a higher level of that one, because US like a Federal Reserve of US will just start in March, but Bank of England it's starting right now. It's also a negative impact on gold prices, because Federal Reserves are just changing their easy monetary policy to tight monetary policy, so they will just raise the rates. It will be good for fixed incomes, and it will be bad for precious metal investors. All right, as I said, tomorrow interest rate decision of Bank of England, it will just affect these currency pair. If they raise the rates, then we will see high level of GBP USD. If they just keep it, and if a dollar index rebound, then we will see another sell-off. That's the scenario, and that can happen like that. Thank you so much for watching us. We will be together on more news. We will cover more charts with you tomorrow morning. Have a nice and profitable day.